So I think gold probably is in a base building currently. We have seen that it peaked in January at around 5,500 $600 mark, and thereafter it corrected to nearly 4,000. There was an attempt recently; it went closer to that level, slightly below that level, and has now come back again. So it's also seeing the volatility because of the ebb and flow of what's happening in West Asia war with Trump's comments, Iran reacting, etc. So that is all playing out. But we think that the very reasons why gold went up have not gone away. There is still a structural imbalance to be addressed in the developed world of rising deficit and debt. Even today, they are spending $1 trillion in interest payments. They are spending 6% of their GDP as deficit. So there is still a lot of room to be addressed on those elements. And I think that will give more runway to gold. So gold may consolidate near about current levels. Maybe plus minus 5% from current levels for a couple of months. And probably we should start seeing fresh impetus in gold prices as we go ahead. So we are medium to long term bullish on gold prices still. There is still fundamentals that are driving gold prices and will continue to drive gold prices. There is the structural imbalance that you spoke about. There is a issue of moving out of dollar and into other assets, and probably gold is the closest assets where central banks and other large investors can move. So you will see that beneficiary of reserve diversification and investment diversification into gold. There is a scenario where there could be a case of stagflation or real interest rates coming down, all kind of scenarios which are supportive for gold prices. So we are bullish on gold prices. This is a good time to accumulate when it's available lower, about 20-25% lower than the peaks that we have seen in dollar terms. So I think if you don't have enough allocation, this is great time to build that as we speak.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.